Hello, and welcome to Everything Finance, where I help startup business owners get funding and also help people who are currently in business to get funding. In the next video, I will also have a place where you can clean up your credit score. Now, for today's video, I want to talk about how to get funding for real estate investments from banks versus alternative lending. How many can help with alternative lending other than banks? Now, as we all know, for starters, when going to apply for a bank loan, they want you to have everything in order. They will review your financial situation, your credit history, business income, and personal finance will play a big part on whether you will get a loan or not. And of course, a business plan, and not just a regular business plan. No, it needs to be in detail on what exactly you are going to spend the money on, down to the very nail. There are three types of funding for investment real estate loans you can get. First is a traditional commercial mortgage. They work similar to residential home loans, but are tailored for commercial properties. These loans usually come with a fixed rate or sometimes a variable interest rate and have starting terms of 5 to 25 years. But at this rate, the borrower needs to make a sizable down payment of 20 to 30% of the property's value and have strong credit to qualify. Second, the Small Business Administration offers government-backed loans such as SBA 504 and 7(a) programs, which can be used to finance commercial projects. SBA loans are ideal for those who don't qualify for a traditional loan, but I might can help you with this, so just stay tuned. Also, they may have a lower credit score or limited capital. These loans offer longer term and competitive interest rates, but will require more documentation and may take longer to process. Next, commercial bridge loans. Now, commercial bridge loans provide a short-term financing to investors who need quick access to funds while waiting on long-term financing. These type of loans typically last about 6 months to 3 years and are often used to, quote, bridge, unquote, the gap between purchasing a property and securing permanent financing. Now, for the good news, I am a part of a company called Rock Financial. They will work with you if you have bad credit. The minimum credit you would need is a 650 FICO credit score. And even if you have to use the SBA, they can help with that as well when you apply with them. They will apply with the SBA on your behalf. Now, they fund just about all property types and express funding with as little as 30 days. Also, the lenders that they work with will, of course, require a down payment. Now, of course, just because you have good credit doesn't mean you will be automatically approved for most people, not just banks. Even alternative lending spaces will require you to have some sort of track record to see that you know what you are doing and are not going to lose their money in the process. There have been many people who borrowed from a bank or an alternative lending provider and lost everything. This is why companies, even alternative lending companies, are strict. It's just that with alternative lending companies, they are a little more relaxed in certain areas of lending than banks are. That's all. but you still have to have a prepared, detailed business plan, whether it's getting a loan from a bank or an alternative lending company. You still have to have that in place. That is critical when applying for a loan anywhere. It doesn't matter who, because you have to show your goals of the property you are trying to acquire and your projected income. All financial lending institutions will want to see that. Lenders want to see that you have thought your plan through, and do you have a thorough understanding of the risks that are involved with your asking amount. Next would be the most crucial on your part, and that is choosing the right loan that works best for you. And several types of commercial loans are available. Each of them have their pros and cons. You have to do your own due diligence to make sure you apply for the loan that will work best for you. All loans are not created equal. This is why I said earlier, no matter where you get the loan from, they all want to see that you have thoroughly thought out your plans. And last, a reputable lender. As I stated earlier, the company that I have partnered with, Rock Financial, should be your first try because they have SBA banks that they work with. Also, you may have a better chance of letting them apply for you instead of you going in directly, because like I said, alternative lending companies like my company that I partner with are a little more relaxed in certain areas than banks are. So, with that being said, click the first link in the description for your real estate funding, commercial or otherwise. Thank you for watching. See you in the next video. Take care of yourself. Peace. See you on the next one.